Hello and welcome to the Ledger Lounge, an accounting and business advisory podcast brought to you by James Scott at Manchester. My name's Matthew Taylor.
And I'm Katie Allen. Welcome to the Ledger Lounge.
Hello and welcome back to the Ledger Lounge, episode 13. So lucky for some, or unlucky for some maybe, but joined here by Katie again.
Hi.
And returning from a brief sabbatical, Lauren.
Hello everybody, I'm back again.
Yeah, not quite as creepy as it was in rehearsal.
I'm back.
So today I think we're going to pick up on a previous episode where we talked about MTD and where we were at with MTD and maybe an introduction to MTD, and we're going to take a bit of a deeper dive into it. I think the episode went out back in June. So if you wanted to pick up on that, you could do. And I think following that,
We've had some really positive responses from that episode as well, haven't we?
You did, yeah. So you were messaging the director of HMRC's MTD project.
I didn't know at first, actually. I just thought it was a message on LinkedIn. So I was a bit like, who's this? And then afterwards I was like, oh my God.
So what did he say?
Matthew, guess what? Just said it was good and give us some pointers and stuff. It was quite informative, really.
So we picked up on a couple of those things and we're going to try and incorporate them into here. So hopefully we get a bit more knowledge and information out there. So I suppose best thing to do is start what we already know.
Bit of a recap, yeah.
So MTD's coming in April of 2026, postponed from April 24, then 25.
And it's definitely happening now.
Yeah, there's no going back.
It is definitely happening. And it's part of the Inland Revenue's project to digitise taxes, which is there to improve reporting, ease reporting, I think, maybe increase clarity over what tax liabilities we've got. So we know that the level at which we'll join MTD, businesses that turn over more than £50,000 in April 26,
yeah.
Yeah, I keep forgetting it's 26 next year. I don't know why.
And then from 27, it's anybody that turns over between 30 and 50, isn't it? So anybody
they will
above
join
30K.
the project.
And then the year after, is it? Have they brought in anything for 20 yet?
Yes, I think they have. Certainly it's reported
Yeah.
that they're going to do.
But, I mean, they're going to get everybody in on it eventually, aren't
I think, to be honest, the people that fall into that 30 and 50k bracket, you'll probably find a lot of people will just do it anyway. They'll just sign up for it anyway.
Yeah.
Or accountants will just sign people up for it because eventually you're going to have to do it. So
in anticipation that they're going to
for us as well as a firm, why would we do 70% of our clients using one report and then keep a couple more on another? We may as well as a whole just do everybody, haven't we?
Get them all in. Yeah.
Eventually.
Yeah. And I think we've said before that a lot of the clients will drop into that 50,000 anyway, because if you've got rented property and you've got self-employed,
business,
you're going to be probably over that 50,000 level.
And probably from 27, it's going to be the people who just have rentals, maybe, or a much smaller side hustle sort of self-employment alongside a main job. They're probably going to drop in there.
With a retirement income that's also got properties or whatever and probably doesn't know about it.
So do you think that people who are under the thresholds now need to worry?
I think they need to be aware. They've got another year. Is worry the right term? I'm not sure. But
well, worry that it's coming for them.
It's going to get you.
Maybe the mindset needs to be not worry. Needs to be look at the opportunity that's coming from it.
Yeah, true.
Find out more about your own business. So you're going to have more information at your fingertips to be able to maybe develop your business, do better in business, and also get a rough idea of what your tax liabilities are going to be.
Yeah.
I think a lot of people that have got businesses will most likely already have an accountant as well. So I don't think they'll be worried. I think it'll be more they're reliant on their accountant to tell them this is happening. This is what we've got to do. They're probably just waiting for their accountant to tell them, but not asking any questions.
It might be the wrong term, but I think the people that will be worried are going to be the landlords. Yeah. Because they turn over, smaller amounts. They're not used to submitting things quarterly like maybe a VAT registered business would do. And I think that they will be apprehensive about it, and it might not come for them until April 2027. But I think getting prepared now, and yeah, you might not have to worry now because we're in 2025, but it'll creep up because how fast do the years fly by?
Yeah, absolutely.
And then,
well, you was only just telling us it's 6 months till Christmas.
It's 6 months till Christmas.
Probably not by the time this episode gets released. It'll be 4 months till Christmas.
So MTD, what does it involve from an individual's point of view? So I know that we've got to file quarterly returns.
That's right, yeah.
Oh, sorry, they're not returns, are they?
No, they're just quarterly statements, really, to
thanks, Katie. Yeah,
show your income and expenditure.
Yes.
And unadjusted, which came from
Craig.
Thank you. Craig said they're not quarterly returns, it's quarterly submissions of your income and expenses and unadjusted. And then your fifth one will be perhaps what you currently do now is your return. Your fifth one's your return, consolidating that information. Okay. But you're just making HMRC aware of where you're at with your liabilities. Or
you don't have to pay your tax at that point. You don't have to calculate tax.
And to be honest, in hindsight, making these submissions quarterly is actually going to be more beneficial for a lot of self-employed people. They know where they're up to.
Yeah,
they can make arrangements for saving the money or towards that when the bill comes in the January.
They'll also get a bit of insight into if they've only submitted previously once a year. If you're doing quarterly submissions, you'll get insight as to how you're doing right now, and you can implement any changes that you need to make ahead of time if you do need to make them. So if, for instance, you've had the first quarter and you can see that you're not making any money, you can dive into that and see why, and then make changes for the next 9 months ahead.
Yeah, it can help you make big decisions, can't it, sometimes?
And on the other side, if you're making a lot of money, you can then, like you said, start making provisions for saving tax.
Or getting more advice.
Or tax planning. You can, if you're thinking you need to buy a vehicle or any other piece of machinery and you know that you've made a lot in the first, say, quarter or 2 quarters, and you know that you can buy, if you want to buy that machine anyway, buy it within the tax year.
Yeah.
Yeah.
So you can claim the allowances on that rather than after the tax year.
I think a lot of people might not realise how many pros there is to actually do this coming into place and being done because of all these reasons that we've just discussed.
Definitely,
Rather than it being they want to see it 4 times a year, 5 times a year. Why do they want to know that? Do you know?
Yeah, I think that we all go, we're doing 5 times as much work as we were doing. So maybe.
But it's going to have its benefits as well for the client.
Through that initial pain. Because I think we're going to be filing through digital links, aren't we?
And what do they actually look like? What's available?
The one that immediately springs to mind with me is through software, through an API to Dealing and Revenue. So your Zeros and your QuickBooks and Sage and I think Dext, and probably Free Agent, have all got various iterations of software. Yeah. But what surprised me was that you're still going to be able to do through bridging software. When I was reading up about this, I was like, and I think it must have been something that they brought back in to maybe ease that transition for some of the less technically advanced businesses.
I think it was probably quite fair of them to do that because there is a lot of people that aren't digitally keeping the records, and to expect them to go directly from keeping paper receipts or spreadsheets or whatever to fully using a software with short time frames for submission deadlines, which are 5 weeks, aren't they? Same as the VAT a month and 7 days, I think is a big ask. So to use bridging software where they can gradually transition, I don't know how long they're going to allow bridging software. I don't think
they've said there's a time limit to it.
Right.
And bridging software is just an Excel spreadsheet, really, isn't it?
Yeah.
So there's an element of digital in it, but I don't think you benefit fully from all of the that we were talking about earlier. Those little pluses.
Yeah.
That you're going to get from having a bit of accounting software doing it. It feels like you're doing it, but you're not going to get any added benefit from it.
So that spreadsheet thing will be good for some people, wouldn't it? Really, people who are perhaps older.
Perhaps the people that have only ever used, the people that probably only ever use Excel currently probably had a huge change in, the early 2000s going from actual physical written cash books to Excel.
Yeah.
And they're probably
Simplex
a bit,
debooks.
I can imagine them types of people thinking, I can't do this again. I don't want to do, they don't like change.
Another change.
Don't want to have another change. When Excel works for me.
You can't see that the Inland Revenue are going to put up with
the Inland Revenue probably use Excel.
Yeah, I'm sure they do. But they're not going to put up with bridging software or forever because it's not fitting into their model. They might not have announced a transition to do it. I imagine at some point it's going to come in because their standards are tightening up all the time.
Yeah.
They're wanting digital records. They're wanting the audit trails so that they can get the most out of the information that's been supplied to them.
So it's a bit of temporary relief. That
so
probably people shouldn't get too comfortable with bridging software. It's probably good to use over a transition if you're not currently digital. Transition into using digital.
And you're still using manual records as well. So one of the beauty about the software, whoever's software it is, they tap into this benefit of open banking, which is a bank feed. So that the information flows from your bank directly into a piece of software. Yeah. You're not having to type something in. So you've got less risk of there being an input error. So the information you're going to be sending to the Inland Revenue is more likely to be correct as well. And I think that if you're a growing business as well, you don't want to be working off spreadsheets anymore.
Definitely, and also if you're a growing business and you've got thousands and thousands of bank transactions, the first couple of hours of that accountant's job is typing up your paper statement onto an Excel spreadsheet before they've even actually looked at doing the job.
Yeah.
So I get it.
Then categorising all of those costs out in Excel in some sort of work paper.
Yeah, it could be not even hours. It could take somebody a full day to put 3 months worth of bank transactions onto a document. Or Well, you can download a CSV, I suppose, from your bank. But even then, it's extra work you don't need to be doing. And at some point, like I just said, we're going to be moving away from bridging software. And you think that maybe in a couple of years' time when everybody's in there in 2027, they're going to go, right, okay, another year. Yeah, and then it's not going to be acceptable.
And then
people will then be used to doing the quarterly submissions, though. So the move over to software should be a little bit easier, and they'll actually start to see the benefits of using software at that
how much
point.
Time it's saving them.
Yeah, because they're already doing it quarterly. It's probably taking them a load of time because they're still dealing with paper, but then they'll be on board quarterly submissions, and then they can get into the software, and it'll just probably make their life and their accountant's life a lot easier.
So that moves us on to, I guess, the opportunities from MTD, especially if you're a business owner, because that's where you want to be.
I think those are the ones that are going to benefit the most from this, rather than like landlords and stuff like that. The people who are actually running businesses will be the ones who benefit.
So. Yeah, I feel like the landlord bit is just to capture those that have got multiple sources of income. Maybe brings in some smaller businesses earlier if you've got a rented property.
That's right, yeah.
And I wonder whether that was the reason for that.
Or like you said, like businesses that are just starting up that might be just turning that 50k threshold, who are then going to grow as the years go by, and then eventually will see the benefit of it.
Yeah. So you're going to get visibility over your cash flow as a business owner.
Mm-hmm.
You can forecast, you can look at trends, you can look at your margins, you can look at when your bills are due, because a lot of bill invoices and bills these days that you get in have got your due date on, so you can look at, okay, that bill's due in 30 days or in 14 days, so you can put it into your cash flow forecast, and you know then.
Yeah.
And you can automate those cash flow forecasts within your accounting software. That's so all of those things, you can look at your peaks and troughs.
I like that. MTD made us digital, but my accountant made it work for my business.
Well, that's a big one.
Yeah.
If you've got the proactive accountant who's willing to invest in going on this journey with them, and not just doing the submissions, and they're actually willing to sort of work with you and just give you advice and get really involved with it, there's going to be a huge benefit there.
At James Scott, that's one of the things that we're looking to do all the time, isn't it? To shift towards advisory, working with our clients to get their businesses working better.
Absolutely, yeah.
Having information. We were doing a cash flow for a business earlier this week, weren't we?
Yeah, we were able to
report from within the software, but on a cash basis to see where the cash is coming from and going to. And whilst the business looked like it's doing okay in the profit and loss, but if it's not collecting its debtors in, it's not going to thrive. So it's going to be old money. So we could see in there where the peaks and troughs had been, then forecast them a little bit further forward and help the management make some decisions.
Yeah, and then they're coming in next week to discuss what we've put together, basically.
Yes, on Monday, I think. Yeah.
The tax payment is also, I think, a real big benefit, because there's a lot of people who will get the tax bill once a year and go,
I didn't know I had to pay that.
You know, and how long have I got to pay? And sometimes if it's late, or there's been some circumstances that mean that you're completing the tax return later on in the year and you've only got, say, 1 to 3 months to pay that tax, sometimes it can be a big shock. So by doing this, you're going to know.
It could be a really big stress as well. Once you do find, once they are aware. I can imagine if they've got quite a big tax bill that your tax is due just after Christmas. Christmas is coming up, and
January is always sort of a blue month, I think, for everybody. Everybody's, spent at Christmas, and then also obviously the tax payment is due 31st of January. So doing the quarterly will enable them to budget instead of just getting that bill once a year.
Yeah,
you'll know what's coming.
Yeah, so that's one of the big problems that we find is when the client gets the information to us really late.
Yeah.
So we haven't got that time to plan.
Yeah, not that it's a difficult discussion, but it can sometimes be a difficult discussion to tell a client who, going back to what you said before, might look like they're doing really well in the profit and loss, but they've got no cash. By the way, you've got this tax bill at the end of January, and that's in 10 days' time.
Yes.
Or, and you feel like the bad person.
Yeah,
or
you do,
you do, don't you? You do feel really guilty for.
I mean, it's never nice to tell somebody that they owe X amount of pounds by a really short time period, but also they could have a really good year in that previous tax year. But if you're doing it so late and then they've had not as well of a year and they've used money from the previous tax year to prop up the current tax year that they're in, then they also, they might not have it to hand then because they've used it elsewhere. So this is going to be a real game changer, I think, for those kinds of people.
Yeah. I think another one that I thought was a really important element of MTD was getting your own dedicated bank account set up for the business.
Absolutely.
Don't mix a personal bank account and think, I can run my business through it.
Yeah.
It doesn't have to be a business bank account as such. It can just be a separate
current
bank account.
Yeah. Because there is fees on business accounts, so a lot of people don't want to open them for that reason. But a separate personal current account is fine as well.
So I think if you were a sole trader, you could do that.
Yeah,
you could quite easily just open a. I think it's not really possible if you were a partnership, if you were a limited company. But if you're a sole trader, I think you'd be fine just opening a separate account with one of the online banks, hook that up to your accounting software, and that will just mean all of the transactions that are in there are going to be easier for you or your accountant to reconcile, allocate, and then make that submission so much easier.
Whatever all the transactions that are in there are for your business.
Yeah. Well, just coming off the back of what you've just said there, another good point about having that separate bank account is if you've got a bank account that's mixed with business and personal, it can be hard to see how the business is actually doing, because if you're using that bank account personally and for your business, the balance in that account that you look at the end of each day is not necessarily how your business is or isn't doing, because there's all sorts of personal stuff mixed in. So it'll be much easier for people to track how the business is doing, and then they can take that money out to fund the personal spends.
Yeah.
And you can see all in one account. Well, I've got, for example, £2,000 in the business account at the end of the month, and then I can allocate my personal spending by transferring it out.
Yeah, just as one transaction.
Yeah.
One of the things I was thinking about, Anne, was businesses that they might have their internal bookkeeper, but they might have an external accountant. So you've got this position where you've got 4 reports through the year, and then you've got the end of year submission.
Yeah.
Mm-hmm.
The same as your tax return now. So you've got 4 submissions, you've got the end of year return. if you've got your own bookkeeper, generally you'd send your accounts, or you would ask your accountant to produce some year-end accounts. How does that work with MTD? Because at the moment we have to have like an agent. We're an agent.
Yeah, you have an agent
for self-assessment with our clients. But then if you had another person, would they be able to submit as well?
So that's somebody, when you've got an internal bookkeeper, somebody who's doing all the bank recs, somebody who's doing the VAT returns, and then the accountant's literally just doing the year-end accounts and tax return submission. So that person can still do the MTD.
So it allows for multiple agents?
Yes. It does allow for multiple agent access, but you had a conversation with Craig about it, didn't you?
Yeah, it does. It does allow for multiple agent access. If it didn't, a lot of people would lose their internal bookkeeper that they probably rely on to make payments, to oversee the bookkeeping element of things or whatever it would be.
It's probably important that it does allow multiple agent access, because that's, if you've got an internal bookkeeper, they're the ones that are dealing with the day-to-day transactions. They see it all, they're doing the bank rec, so they would be the perfect person to do that report. Whereas if they couldn't, and your accountant had to do it, they're not dealing with the transactions. If you were an accountant having to do it, you would almost have to check everything that
but like running a little audit.
The bookkeeper had done anyway. So like every time rather than once a year.
So you can have an extra agent. You could actually have an agent who did your VAT.
Yeah.
One who did your PAYE.
Yeah.
And one who did your self-assessment and your MTD for income tax as well.
Yeah.
So you can have different accountants doing every little section of the job, couldn't you?
Probably wouldn't recommend, but you could.
It does sound a bit complex, but it is possible.
Yeah. No, it's better to have everything in one place. Do you think there's any pitfalls to this whole thing? Like anything that's going to come up that potentially could cause some problems?
Yes, I think, and some people probably still do this now. I don't know, I've never come across it, but if you're not organised enough, or you've not got your books up to date or whatever, but people want to avoid a penalty or anything, they might just submit something knowing that, I haven't checked it, I've not had time, it's last minute, it's on the deadline, and they've over or under estimated the tax. Is it an estimate? Not an estimate.
Over or under reported.
Yeah. So I do think I wouldn't necessarily say it would be backlash. I think there'll be a lot of people that will just submit things on a whim thinking, I've got to do it, so done. And then they'll forget about that in the next quarter, because they're doing the next quarter then.
And you're referring to people who are doing it themselves.
Yeah. So then when their accountant picks it up at the end of the year to submit that return, and they've got it in the head that they owe, I don't know, £300, but it's actually 3,000.
Yeah,
because they've got personal expenses in there, or they've not reconciled the bank, or the holiday to Cyprus has been paid off through the business bank account and it should have been drawings or whatever,
Yeah, so it comes back to they don't mix your personal and your business up, and make sure that if you are submitting something, that you've done everything that's necessary to make sure it's an accurate summary.
It could have a knock-on effect for everything, not just your income tax. That could have affected VAT returns if you've VAT registered.
Yeah.
You could have, if you've not reconciled your bank, or you've only half-heartedly done a little bit of the reporting for that quarter, but you've not completed it. You could have submitted other submissions for VAT, corporation tax, or anything, couldn't you, if you've not done it right?
I think people who do it themselves are putting themselves a little bit at risk anyway. I think they probably always should get, because there's a lot of people out there who will just do their own full tax return, and I think they're putting themselves at risk by not using an accountant in the first instance. And I think if they try and go head first into MTD without an accountant who's going to be there to oversee it and check it and guide them in the right direction, they're also going to probably not struggle, but they'll be unknowingly struggling, because they might be missing opportunities to claim costs that they didn't know that they could, or they might be overclaiming. Subsequently, you're paying the wrong amount of tax, aren't you? But people who do have accountants, I think another risk or pitfall is going to be getting the stuff over to them too late.
Yeah.
So for these quarterly submissions, if they're not used to doing a VAT return, where they're used to bringing in quarterly, if they bring it in 2 days before the submission deadline, if everybody did that, the accountant who's dealing with it is not going to have time to deal necessarily with everything. And some accountants might put a bit of a submission time frame on it, like to say we need your books by a certain date to be able to provide you with the best service that we can.
Yeah, I think this is where it all comes into the digitisation of the whole process.
Yeah.
That if we can get information
real time,
in as near as real time as possible, then that's going to help us.
Yeah.
That's going to help us to help the client.
Some people might be able to avoid that by just basically not using the bridging software and going sort of headfirst straight into using a software.
So do we think they're feeling bullish about?
As my water bottle says.
And I was trying to work out whether I could use all of your water bottle little challenges in the podcast.
I think we've covered quite a lot there. And I think with this MTD thing, the more and more it creeps up towards it, we probably are going to end up getting another episode done because there's going to be, we're going to find out more, aren't we? And
you could probably do one after we do a pilot.
Softwares and...
Yeah. So hopefully that's been a little bit more of a deep dive into the benefits and potential pitfalls, if you get it wrong, of MTD. So we're almost there.
Yep. Nearly there. Ooh. Drink more.
It's the year I get married as well, 2026. What a good year.
Yeah, MTD and Kate is going to be Mrs. Williams.
I'm not changing my email address, so it'll be annoying. Having to learn. Yeah. Don't want that.
Leah changed hers, didn't she? She changed
hers.
Quite a few. Yeah, everyone did when they got married. Just leave it, Kate. People might just think I've just missed the TIE off the end of my name, so Cat. I'll be La, and you can be Ma.
Oh, what is it, Kurt's?
Mama.
Kurt's granddad calls you Sadie.
Stacey. He's deaf, so when I first met him, he didn't hear Kurt tell him my name, or he was listening, but he obviously didn't hear him. So he thought I was called Stacey, and he still calls me Stacey every time I see it. This is like 14 years later. He says, "Hiya, Stacey, all right?" He does it to wind me up now.
Oh,
it works.
Right, so from Lauren, Stacey and me, thanks for listening. See you next time.
Bye.
The Ledger Lounge is brought to you by James Scott Accounting and is hosted by Matthew Taylor and Katie Allen. For more information, visit jamesscott.com. This podcast is recorded at and produced by QPod Productions, audio by Matt Dean and video by Eddie Corteen. For more info, visit kupod.co.uk.